this to somebody else the other day. He has my respect level as far as like calculated and the way he does things.
Yeah.
And he knows when to do things and when not to do things.
Mhm.
So I don't know. We were going over this on I think a breakdown or something.
Yeah.
And I don't know. I was a little fearful that this would actually happen.
Mhm.
So I guess it did. But
He's over there putting in the work.
is that Paul?
Yeah, whatever.
Yeah. What's up, buddy? How are you? All
I'm
right.
tired, but I'm fine.
So yeah, what I was saying in the group was what's it called? Wait for the pullbacks, right? We're gonna have a lot of pullbacks during pre-New York. You guys know that. So just we got prelim GDP coming out. We have unemployment coming out. There's if you guys have runners, obviously leave the runners in and let them ride. But I would just not try to be too aggressive during pre-New York right now. And plus, we started the stream a little late too, so we're not going to be that tempted, right? At 6:30, and we're seeing all these moves happen and wanting to just jump in or trying to catch the pullback on gold or anything like that. I wouldn't do that. Just wait for the support to form and let it ride up.
Yep. That's why the reason why we started late a little bit is also because usually the moves happen when you have like actual news and stuff coming out. So then you have Governor Bailey speaking, and then you also have prelim GDP, but also you have like the macro fundamentals like Russia forces advancing and all of that type of stuff. You're going to see all sorts of news coming out now. This has been happening since like last night, right? Since the very first news came out. So of the very first news of Russia invading came out. So we're going to see a lot of those, but paired with economic data coming out, paired with the volume that we see with the market opens, like that's pretty much you want to be looking for.
100%.
And you want to be back testing this kind of stuff as much as you can. So remember when you sent me that article, I wasn't looking at the news at that time, but you sent me that article earlier this week of where Putin was asking for permission to do this, right?
Mm-hmm.
And that same day, was it? I think was it the same day when there was I think it was like Tuesday. There was a bank holiday going on in Asian session, so we're like, all right, what we're gonna do instead is we're gonna do like a simulation session. So we did a simulation session on the last time there was geopolitical tensions going on, which was last year.
Nice.
Which was last year, the Israel-Palestine stuff going on. I'm kind of hesitant to say it, but we do have a recording of it. We caught like almost 900 pips that time.
Are you hesitant to say it?
No, a lot of people are like, yeah, it's not, that's probably not going to happen or whatever. But we caught 900 pips. I think it was in 2 days. We probably entered a trade on a Thursday and on a Friday. So it was like 900 pips on gold. And it's the same exact way that the market was setting up and the same exact way that I took my entry yesterday. I'm running for like 800 pips right now. Almost.
That's awesome that you guys did that. I mean, I think we've been saying it, and I think we've broken down gold many times. Wait, are we live on YouTube yet?
Yeah.
Okay, yeah, but we've broken down every single move here on gold from the very beginning, or from at least, I believe, from when you guys started trading, which is back in like at least 2017 over here. Right? Trump came in office. There's a lot of uncertainty in the market. I wouldn't say fear, but uncertainty, right? We got a new president that has never been in politics before, basically a celebrity. So it creates a lot of conflict around Washington, D.C., around the world as well. A lot of people are uncertain, which is why I think Putin almost waited to do this, to be honest with you guys. Where you guys saw in 2014, What did he do with what's that town called? I have it here. Crimea. Remember 2014 with Obama in there? He was messing with Crimea a little bit, kind of like what he's doing with Ukraine, but not at this scale.
Yeah.
And then Trump came in office, and it was almost like he had kind of some kind of respect where he's not going to do anything. Now, a year into Biden, he kind of sees some weakness, to be honest with you. And he knows that he can get away with some of these things. Even though we're threatening him with sanctions and everything, he's still going to do it. He doesn't care. which is interesting to me. But anyway, like you have a lot of uncertainty. You have bullish gold over here. Then you have the what do we have? Iran, right? We bombed Soleimani, took some Soleimani out, almost started World War III with that. We had the trade deals, the what do you call them? Tariffs. We put tariffs on China for trade, which caused a lot of turmoil not only for China but for the U.S. as well. But again, Iran came into the picture. COVID, right, shot us all the way back up to historical highs. We started to learn about what COVID was a little bit. Vaccines started to come in the beginning of 2021, end of 2020, November, I believe they came in. And then we ended up holding support here. And then we had a lot of fear of inflation. And then, as you said, the Israel and Gaza conflict, which pushed us all the way back up to 1900, right, where we were holding that resistance.
Mm-hmm.
We then got a very good report of NFP, right? Pushed us all the way back down to 1750. We retrace a little bit, and then we get another NFP. Sorry if these arrows are confusing. Another good report of NFP bringing us right back down to 1680. Right? Then we've been consolidating in this area. Fear of inflation as well happening over here. And then again, geopolitical tensions. Anytime you have geopolitical tensions, we're going to see gold rally.
Yeah, and this time it's obviously Russia and Ukraine. So that was all the geopolitical tensions and the nice moves up that has happened on gold in the past couple of years.
100%. Gold is looking nice right now, but...
Yeah. So, just to quickly break this down, you guys know the 1755 to 1830 levels. Stefanos has broken that down multiple times in our live sessions and even our weekly outlooks. The next area is 1900, which is clearly this resistance. Then 1970, let's drop down to the weekly. That's that resistance right there for all that liquidity that was pretty much happening between 1900 and 1970. So look how nicely we tapped right into that area, and then now we're kind of rejecting it. So that's not to say that we're going to have like a massive sell-off, because we still have those tensions going on. Russia just invaded Ukraine, right? So we're going to continue to see some more of this news until it seizes out, exactly how it happened with Palestine and Israel last time, as well as we tapped into the 1900 areas. Right, so same exact thing until that seize actually happens. We're going to see continued retest of some of these key areas, which are clearly liquidity areas, as you can see, right? So on some of these higher time frames. And then, so if price pulls back here and then continues up, that's when we start to worry about some of these higher levels, which is the highest that price has ever been on gold, right? That's the highest that price has ever been in 2020. And then let's drop down to the daily. So even here on the 1900 levels. So as you can see, a lot of consolidation happening at this. And that's pretty much what we mimicked leading up to this entire massive push up, right? We had a ton of consolidation, and as soon as price broke out of that consolidation, it was nothing but just volume in the markets. So I'm going to mark off that. So you have that daily consolidation going on at this, and the 4-hour one right there. Drop down to the hourly, and so that's where we start to see price pulling back, taps right into that 1970 zone, and then you see a pullback happening. And right now, we pushed all the way down here, and then right now we're flipping back up bullish. In the last 18 minutes, I want to see how this candle ends up closing, and then Governor Bailey speaking in the following 15, and then you have prelim GDP coming out 30 minutes into open. All right, you want to break down any scalp opportunities that you see here?
Yeah, sure. Like I said, I think we're waiting for the pullbacks, maybe coming back down into this area. I wouldn't count on it, but we could very well possibly come back down here, grab liquidity, better price, and then price just shoots right back up to retest the high. All right, so don't really try to catch that move coming down. Sometimes you can do that, but right now with the amount of fundamentals that we have right now, I would just be waiting for supports, take price right back up to where we just retested, and then continue right back up.
Yep.
And we could very well push right through 1980. But that's, simple. It's, nothing too complicated,
Yep.
My fiance just put a piece of chocolate on my desk. Nice bed.
Yeah, so right now, even the hourly candle is bullish.
Yeah.
Still the 4 hour still bullish. Nice top wick rejection. So I do want to see a kind of a deeper pullback than what you marked off, Stefanos. I kind
Oh
of want
yeah.
to see. I want to see a deeper pullback into like 1930s or
Oh yeah.
1925 areas, just so it's a correction of this massive push up. This daily candle
Yeah.
started with like no bottom wick whatsoever, and it pushed up for like almost 650 pips.
Yeah.
So I want to see a correction of that, and then a continued push from there. I think that's
Yeah, I
gonna
would
be a
love that.
yeah. That's gonna be a much better entry.
Can we see that 1972 level to the left a little bit on the higher time frames?
Which time frame?
Maybe daily or weekly, whatever you can. If you can scroll to the left. Okay. Yeah, you got that heavy resistance right in that area. So
Yeah.
yeah, we could very well reject. We have a candle like if you see as price came right back into this level of 1900. Obviously, that's the first time you saw how strong 1900 was.
Mhm.
We pushed right back into this level, grabbed liquidity, closed bearish, retested 17 or no 1970, 1980, and then we continued right back down below this area. So
Mhm.
we could very well continue after tapping into this area over here, come down over here, hold support, and then continue right back up to retest highs. Like we didn't do last time, but we could possibly do now.
We could probably end up doing the same thing right now, where it's right now. I think what the catalyst is going to be to help price break out of this zone is if the rest of the countries like the U.S. and then the European countries, UK, all of that, they come out and instead of like just placing sanctions, if you see continued war,
Mm,
right? I think that's going to be the catalyst to push price out of the zone, maybe come back and revisit the previous highs that it has created previously, and then continue pushing and create even higher highs, because this is the highest point that gold has ever been in its history. But if we continue to see like news about Russia, Ukraine invasion and all that going on, and right now all the rest of the countries all they're doing is sanctions, then maybe we're gonna come back and probably tap into these areas, kind of mimic this until we see some sort of seize into that war, and then maybe push right back down and mimic the rest of this.
100%. Yeah, well, I think we're waiting on. Obviously, we got some U.S. data coming out, but at the same time, like that all takes a backseat to what's going on now.
Mhm.
But I think the world is obviously waiting for New York volume to kick in, and
Mhm.
also Biden's response.
Yep.
I think he's meeting with G7 today.
Mhm. So I think that kind of lines up with that 1930 pullbacks of this
Mm.
entire massive push up and then a continued move up from there, which is still a pretty good range if we can catch another like scale in or something here, because that's like almost 300 to 400 pip move back up.
Yeah, and that's what you guys want. Even if you guys have runners, it's like okay, you're securing on your way up, hopefully,
Mhm.
but you get that pullback where price is all the way coming up here, creating these historical
Oh,
highs on the year, and then you get a discount, right? Price goes on sale, and then you could come right back up instead of trying to buy at the high up here.
yep. So this is for gold. Let's go ahead and break down GJ real quick.
Yeah, I was joking with the group this morning. I guess we're we're gonna be closing below 156 on the month.
Yeah. Because the yen is gaining strength, right? That's exactly what we were talking about.
Exactly.
That's the only reason why GJ would be dropping below 156. Because if
Hmm.
you look at it from a UK perspective, their economy's opening up. They're getting like some of that and supporting data and optimism and all that type of stuff. And then, still the sentiment was being put out that we're going to see increased interest rates in March. So there is no reason from the UK, the pound perspective, for us to drop below 156. But
Hmm.
if the war happens, then where do you, flee next to after the dollar, the yen? And that's the strength that we have been seeing here.
You know what? If we could go back to gold real quick,
Yeah.
I just want to call something out real quick. We've been seeing that volume when New York opens, where price will pull back a little bit during pre-New York. It'll consolidate, waiting for that 8 o'clock, and then all of a sudden it'll just skyrocket.
Mhm.
So I'm wondering if that's gonna happen. If you go down to the 15-minute right now,
Yeah.
you see, like I think we saw this on Monday or maybe late last week, where price like we made these highs, we come right back down, consolidate a little bit, but we hold a good support, and then right around this area, 8 o'clock comes around, maybe 8:05, maybe 8:15, but we just shoot right up.
Mm-hmm.
So just prepare yourself for that. I wouldn't get in before 8 o'clock, but just wait for your setup and be patient. I just wanted to say that we could go back to GJ.
Yeah, and like another way, like to figure out whether this is an actual trade or not, and that if it's gonna shoot up, then how you're gonna take the entry, is you wait for the basic structure, right? So you know how exactly how you're marking it off, Stefanos,
Mhm.
like this entire move and then pullbacks and continuation up. So if I'm looking at this is clearly a push down, right? You clearly grab some liquidity with these like bottom wicks and stuff. I would hop up to the hourly and see how the hourly closes here in the next 11 minutes or so, right?
100%.
So if I go back up to the hourly here, so if it closes bullish, let's say or even like a weak bearish doji candle, not with like a good voluminous body or anything. If I see price breaking above that top wick on the hourly, which I'll mark off right here. So if I see price breaking above this, that's when I drop down to like the 30-minute time frame, right? So on the 30-minute, in the next 10 minutes, obviously it has to close bullish. The next candle needs to make some sort of a bottom wick and continue pushing. And then as it continues, then I would take, whatever small amount of pips that I could catch here, which is about like 40, 46 pips. And then let the rest of it run to see, how high it's going to go. Even if it comes up and taps into that 1976 or 1980 area almost, that's still 131 pips right there.
Mm-hmm. Yeah, there's a couple of things too. If you could hop back up to the 1 hour,
Yeah.
we have this wick right here, and that's 1950, right? So price tapped into there, but not only that, the previous candle had no bottom wick. Mm-hmm. So we passed the low, grab liquidity. This candle is obviously getting a lot weaker over here. So just like Sharma said, all you need is a pass of this hourly candle, and you could have some solid confidence that price is gonna come up and retest this high at least.
Mm-hmm.
Right? And we could push through, but again, we could end up consolidating over here, just retesting the highs, and then maybe retrace a little bit with everything being priced in.
Yep.
Right? So just be careful. And yeah, stick to your setups, understand what's going on in the world, and that's it. Just stay patient.
Because the market collects orders in two ways. There's retracements and consolidation. So either it retraces somewhere down here, like we saw in the higher time frames price doing previously, or we end up consolidating in these areas, and then we see more news updates on this whole invasion, and then a continued push up. Maybe even with prelim GDP, if we miss the numbers that we're expecting here, so 7%, if we miss that and it comes out into like low 6 or 5 or something like that, and then paired with unemployment claims, which you get every single week, then I do expect gold to continue pushing.
Mm-hmm.
But if we're around like the same numbers as we're expecting or as previous, even like 6.7 or something like that, which isn't really too far off, something like that, and then we're pretty close to the unemployment claims here as well as previous and forecasted, then I do expect the gold to continue its technical move.
And also, like, real quick, just like a psychological talk, I know some of you guys missed this, right? Whether it was unconfidence or not really knowing what's going on, don't get FOMO over this. I know it's very easy. This is where you guys switch your mindset from, damn, I wish I got that. Like, well, everyone else is getting that. I missed out on, what are we at? Like 450 pips right now. Mm-hmm. I missed out on all that. Instead of having that mindset, you have the mindset of, let me go back and backtest this. Let me understand macroeconomics. Let me understand politics. Let me understand what's going on in the world so that I can catch this next time. Because this definitely isn't the first time that this has happened.
Yep, and it's not going to be the last.
What was that?
And it's not going to be the last.
Oh, 100%. So keep that mindset. Keep the growth mindset. Keep the optimistic mindset. And always know that there's going to be another opportunity for you to get in as long as you keep that mindset and learn. If you guys are taking losses, it's not, damn, I keep taking losses here. Instead of that, it's like, okay, how can I learn from this? There's plenty of lessons in this loss, right? It all comes around full circle once you start to understand what's going on, and you always keep that positive mindset. You know, constantly going up instead of just going backwards or just losing confidence on a day-to-day basis. It's just not healthy, and you're not going to get anywhere like that.
Yep.
The victim mindset, you guys all know. You guys know how we look at that too. It's not going to get you anywhere.
Yep. So
So
if
what
you
are we
missed
at?
out on those moves, then same exact thing. Wait for those retracements, and then wait for price is never just gonna continue pushing. That's like one thing. When I started trading and stuff like that, I had to ingrain in my head, and everything after that, like as cliche as it sounds, life became easy, right? Price is never just gonna continue doing this, right? And if it does have a massive push up, then you best believe it's also gonna have a massive correction. All of this has yet to be corrected. There's only two ways for that to happen: retracement or consolidation. So if the market ends up consolidating here, that's perfectly fine because I know we're grabbing liquidity to continue pushing up. Exactly how it happened into these key areas of 1900, right? You had a nice bullish push here and then price ended up consolidating. You had a nice bullish push up here. How many pips was that for? Let's say like somewhere here all the way up. Almost 500 pips, right? 469 pips right there. And then what did the market do? End up consolidating. And then you had a nice push up and multiple opportunities here to get in as well in pre-London session. So once you understand that concept of, there's always going to be an impulsive move, there's always going to be a retracement, and then price is going to continue, or there's going to be an impulsive move and correction or consolidation, and then the price is going to continue, your life is going to become very, very easy. The whole basic concept is price is always going to correct itself, or the market's always going to have to collect orders in order for it to continue pushing. It's not just going to push up like 1,000 pips and then you can't see a comeback or a retracement or anything like that or a correction, and then price pushes up for another 1,000 pips without you.
Yeah, I think also I've always been very hesitant. Like when I hear other people say like trading is easy, especially like very very good traders like trading is easy. I was like, I don't think it's easy. It's a very hard market, but it's I've always said it's a very simple market as long as you keep your discipline in order and you understand what's going on.
Mm-hmm.
I think over the last 5 6 months, I've started to understand what they're talking about. Like it really is easy once you start to really understand what's going on around the world, and then also just being patient and sticking to your plan. It's that simple. It's that easy.
Yeah. I
All
mean,
right, and
I'm
just know you
also
guys
one
are
of
gonna get to it.
those I'm also one of those people who says trading is easy, and the reason why I say that is because whenever you feel like you're adding on too much stuff, or if, for example, price is moving and I'm looking at basic price action, and if I'm in that pool of people who are like, I have no idea what the market is doing, and then you go on and you start adding stuff that you've never even done before, like, I don't trade EMAs, SMAs, I don't do any of that, right? But if I'm in that pool of people who are like, I have no idea, is this a proper confirmation if I'm sitting somewhere here, not understanding that this is just market collecting orders to continue a massive bullish push up. Then I start adding EMAs and SMAs, things that I don't trade normally or I don't have experience trading. I start adding Fibonacci retracements. I start adding a lot of other indicators, or I start testing out new patterns that I've never traded before. Like, that's where it starts to become complicated. But once you go through that entire phase and you're like, well, I just added a bunch of stuff that I've never traded before, right? And I'd have no idea how this would work. A lot of indicators are not going to work together, right? And that's a fact. Those are some of the things that you're going to learn no matter what mentorship group or what website or whatever that you're trying to learn trading off of. So certain things are only paired with, certain things. You can't pair like EMAs, SMAs with Fibonacci retracements and an X, Y, and Z indicator, right? There's only certain things that work together. So once you start going through that entire phase and you're like, well, I have no idea what's going on here anymore, either you erase everything, you got to come back to the basics. What's the candle anatomy, and then what's the structure, and then either you trade supply and demand, support, resistance, right? The more simpler that you keep it for yourself, the easier trading is. And that's what I mean by trading is easy. Keep it simple.
I wonder if it's hard. You guys are all on YouTube, going from strategy to strategy. It's gonna be hard.
Mm-hmm.
I would find that hard.
Yeah, there's a lot of people. The first thing, if you want to know about something, where do you go to? YouTube, right? There's a ton of strategies out there and everything. There's a ton of people telling you what works for them. But again, it comes back to the same exact topic that we talk about so many times, where it's you're always going to have a different strategy than the person next to you. And you're always going to have a different way of looking at the markets than the person next to you. And you're going to manage your risk differently than the person next to you. There's no way for you to mimic the same exact way that I trade, Stefanos trades, or anyone else that you're looking at on YouTube trades, right? But it's just understanding how the market moves for yourself. So come back to the basics. Whenever you feel like I'm overwhelmed, I have no idea what's happening in the markets, and you feel like, well, I'm going to start adding on this indicator or that, confirmation or this pattern that you have no idea about, just come back to the basics and be like, okay, well, what's the basics of price action? Structure. Higher highs, higher lows, lower highs, lower lows, consolidation. Don't trade in a consolidation. Make life easy for yourself, right? And then go to, well, support resistance, supply demand, whichever one that you trade. And then look at candle anatomy, right? If a candle is pushing down, when I started trading, if I want to understand, what are these wick rejections and that type of stuff, like why do they tend to reject or create wicks in the same exact area, exactly how I did on the hourly, create a line like that, create a line here, right? And take a look at what's going on. So this is just like a horizontal ray, but you create a horizontal line, right? And then go back and take a look at, well, what's happened at this area, right? And go back and take a look at the 30-minute time frame, go back and take a look at the 4-hour time frames and all that type of stuff, and take a look at what's going on at this level of top here. Has price rejected this area over and over and over again, right? So we come all the way back to like January 21st, 2021, January 6th, and that's where we saw price tap into this area and then a massive sell-off, right? If you go up to higher time frames, maybe you'll see like a cleaner picture of what price is doing here, crossing through all that consolidation and all that type of stuff, tapping into this even in 2020, right? And then that's how you figure out, like, okay, well, that's what price is doing in this area, right? There's a ton of wick rejections and whatnot going on, and that's because that's an area of liquidity. That's where we've seen consolidation happen. That's when we've seen a lot of pullbacks, and every time price taps into it, there's like some sort of volume that kicks in. That's how you start to understand what's happening in the markets. But obviously understand, the basics of a candle. If a bullish candle opens up here and then closes, or like a candle opens up here and closes, at a higher price than entry, that's a bullish candle. If a candle opens up here and it closes at a lower level than entry, that's a bearish candle. What are dojis? Those type of stuff.
Getting simple here.
Yeah.
So this is just what I think is going to happen and what I think you guys should do. If you guys are looking for this bottom wick to form on GJ on the 30-minute and obviously the 1 hour past the high of the 1 hour right here, I would, if you catch this move right here, I would secure your move right here. Because again, this could all be priced in already, right? This could be the move and that's it. And we could continue to consolidate in here above 1950 or, anywhere above 1900 and 1970, just like we showed you before. So I would secure your position up here, knowing, and then go risk-free, knowing that we could possibly be double tapping and then maybe continue down if we get some good GDP numbers or anything like that.
Yep.
But, just to piggyback off of what Sharma said, this is how I've said this many times, this is how you guys handle being on YouTube and stuff. You can learn everything that you want on YouTube, right? But the thought process of using YouTube is not, I'm going to go implement and learn someone else's strategy. It's, I want to build my own strategy, figure out my own edge in the market, but I want to pull little pieces from other people, and I want to test those pieces in my own strategy on the software that you use to backtest, whether it's TradingView or SharmaFX. Formulate your own strategy, because you look at the market differently than anybody else does. All right, we're starting to pass over here. So I am in.
Perfect.
Let's see how we do. And again, at that high right here, I'm secure.
And if you want to see, if you're testing runners or anything like that, that's still like a 40 something pip move right here, right? So like even if you took an entry right now, or even like 90 pips actually, 90 pip move right there. And so close out 90% of your trade. Let's say, for example, if you're someone who's not able to secure partials for whatever reason because you're trading penny lots or something, then trail your stop loss, right, to a level that you'd be comfortable at, where you're giving price enough room to retest into certain areas, make some bottom wicks and that type of stuff, fluctuate if it needs to, because candles are always going to be fluctuating, and then continue in your direction. But if you're someone who can take partials, then take some partials up top here, close out a majority of it, 80%, 90%, and then move to break even so you're completely risk free, and then let everything else run to see how far it can go. Let's go ahead and let's break down DJ real quick too.
Sure.
Alright. So starting off with the monthly, the 156 level that, we've been marking off for like ages now. And then I'm also going to mark off this little support area. I'm just going to call it 150 flat. Another thing that I'm going to mark off is going to be this previous monthly low down here, because once price drops below that, there's really nothing that's stopping us from coming all the way down to 150 flat, which is about a 300 pip move. So 153. But if price just rejects this and then pushes back up, then you still have another 300 pip move going up to 156. You come on to here, the 156 level on the weekly time frame. That's the entire zone that price just reacted off of. Faked out pretty much, taps into these areas 3 times in a row now, and you're seeing price push down. So you're approaching that 153 level. Right now it's more like scalp opportunities, day trade opportunities. I don't see a swing trade opportunity here unless we break below 153. But even then, I want to see some form of break and retest or pullbacks and rejection of 153 if we're going to continue down to 150 flat for a continued move. You go on to the daily. Clearly, that's a massive, massive push down, right? And all of that is because the yen gaining strength. So that entire push down for around 240 pips. So I want to see how this candle closes, given that this is a daily level. So I want to see how this candle closes, and also notice how many times price kind of reacts off of this area. So if price is going to continue pushing and you're going to look for continued sells, wait for some sort of pullback, preferably somewhere in this area of 154 area, about 154 300, 154 200 area, and then a continued push down, so you have about 60 pips, and then you can go risk free tapping into 153 area for almost 100 pips there. So even on the 4 hour, you had all that consolidation, and once we broke out of it, it was nothing but volume. So you still need to wait for corrections of this entire massive push down. Even on the hourly time frame, you just have small pullbacks and then one little break and retest and then continued push down. But we are starting to get signs of exhaustion here. So that massive bottom wick rejection came back up and closed above this 153 zone. And then the last hourly also closed like a doji. The new hourly is forming. So if we're going to look for any sort of, let's say, even scalp opportunities, and then this is going to be with Governor Bailey speaking. So especially if you're trading GJ, you want to pay attention to what Governor Bailey's going to be saying in a couple of minutes here. So if he's, he says anything that's going to support this entire move down, then you start looking for those trades below the zone. I would highly suggest stay out of this little zone here, because we have seen that price is reacting off of this on the daily time frame, 4 hour time frame, and all of that. And even on the hourly, we've seen the last 2 hourly candles closing above this. So if you're going to look for any sort of sell, wait for price to break below the zone, and then you can target 153 area, while obviously taking partials along the way. But if price just taps into this, doesn't break the previous lows, and then rejects this and continues pushing back up, then just wait for that retracement to be done, and then look for your trades. You can also trade the retracement, but again, understand the limitation of your trade.
Yeah, we're very overextended too.
Yeah, extremely. And then even here on the 30-minute time frame, nice sell-off happening, and then here you created that little support. So notice how the previous 30-minute candle doesn't break the high or the low of this candle here, right? So if you're going to look for any buy opportunities to trade that retracement, you wait for that previous high right here to be broken, so your stop loss could be right into that zone, and then you can target some partial levels as price is coming up and tapping into these areas for about 40 pips, right? And then maybe even let runners go for about 70 pips or something, because that was a massive push down, so I do expect some sort of correction. But once that happens, you're pretty much done with the trade, and then you wait for a continued push down. That's to trade that retracement. If price continues pushing down here, given whatever Governor Bailey says, given whatever we see with macro fundamentals, and then even with like prelim GDP and all that coming out, when the New York Stock Exchange opens up and price pushes down, so all of that in a line for sell-offs, then you look for those sell-offs as price breaks below this little support zone right here. Anything else you want to add, Stefanos?
No, everything's basically on point. That's exactly what I've been waiting for.
All right, perfect. Does anyone have any questions about gold or even GJ or anything that we talked about right now?
Or psychology.
Or psychology, yeah.
No one's having issues with anything?
With gold, the trade that you just entered, Stefanos, what would your stop loss be? What I've noticed is most of the times my trading direction with gold is right, but I just get stopped out because I don't place in a wide enough stop loss for gold.
One thing that you want to pay attention to with that is what time you're entering, right? Also, you want to make sure bottom or top wicks are formed already. I have mine below the previous 30-minute candle, so that should be safe on gold. And what I do is I actually use the lower time frames too, to utilize what we do with risk management, especially on gold. Gold, those lower time frames really come in handy. They did for me yesterday. So if you go to the 5-minute, what I have the 30-minute, I have my stop loss below the previous 30-minute, but I have this whole area right here that I'm paying attention to. If price breaks below that, I'm closing a certain percentage.
Okay.
And you need to have an exit plan for your trades. Have to.
Got it.
So before you enter a trade, it's like, okay, this is my plan for the trade, but also before you enter it, you got to know like what you're going to be doing before that. Personally, I'm looking for another entry in gold for a day trade swing.
Yeah, just wait for those retracements, at least on the hourly time frame.
Yeah, I mean, some could say I got into this prematurely because we do have GDP and everything coming out, so I could have waited for that. But I think volume should be pushing this up, kind of like what we've got in the past few days, where price kind of consolidates and then you get some of that volume pushing up with a lot of these traders coming into the market, bots activating, whatever you want to say. It's we could be still heading back up. So you're either waiting for supports to be formed, or you're taking advantage of the buys coming right back up to retest the highs. Right now we're retracing a little bit. Looking at this area to see if we reject it. We could very well come into here, hold like a support right here, and then continue to drive right back up. But again, if we start doing things where you start to feel uncomfortable, like if you go to the 15-minute, see how the 15-minute is starting to run out of steam a little bit here? That's where, that will help you manage risk. The first thing you guys want to do is make sure that you're preserving your capital before trying to make any types of money. But we are still bullish. We could just be retracing here, and then we get some bullish volume to push us right back up. Don't let this like spook you. Just if you have your plan in place as far as an exit plan and where you're going to secure 50 exactly, this won't spook you too much. If you don't have that exit plan, you're going to be sweating this out.
I also think that's what differentiates a lot of people who, obviously there's always gonna be losses and everything, but I think that's what differentiates people who end up winning and they're able to hold on to their account for another day to trade. versus people who are not. If you're someone who just enters a trade and you have no idea, some of the questions that you should be able to answer for yourself is, what am I going to do if the trade goes in the opposite direction, right? And even that, it's very open-ended, so you can pretty much think about it on your own and kind of make your own decisions about it. But what I mean by that is, if price goes, let's say 5 pips, 10 pips in the opposite direction, and technically it breaks previous lows, am I going to close out the entire trade, or am I going to close out partial trade, or am I just going to let it continue moving down and then hitting whatever stop loss that I had already determined? And then if price pushes up and it goes in my direction, same exact thing. Am I going to take partials here like I said I will, or am I going to let that greed get to me where I see the volume kicking in and I think that price is continuing in my direction, and then maybe it taps like 5 pips, 10 pips further, and then goes right back and hits my trail stop loss or my break-even point, or even maybe I didn't even move my stop loss, it's at the original spot, and I'm just going to let that winning trade turn into a losing trade. So whether it's a profitable trade or a loss, you still want to be able to understand how you're going to manage your trade. And I think that's what a lot of people fail to do. If it goes in their direction, they become scared too quickly, because a lot of people have this sense of fear where it's like, if it's moving in my direction, I hope it doesn't go in the opposite direction. And they close out too early. And then they're like, man, I should have just let the trade run. And then, if price is going, the same people, and if price is going against them, they just have this hope of, I hope, the price ends up going in my direction, and they end up, widening their stop loss and things like that.
I just wanted to answer Kat. Kat, are you talking about this trade right now? In the chat? While we wait for Kat, I sent something into the chat. If you want to bring that up, Sharma.
Yeah. Give me 1 second here.
So 8:15 just opened. Also, the previous 15-minute just closed bearish. I did take off a little piece of this just to, with my rules, if the 15-minute closes in the opposite direction of my trade, I'm going to cut off a little piece of it.
Mm-hmm.
Here we go. So this is something that, like, no matter what your strategies are, anybody in here or anybody on YouTube, you'll be able to follow this, because I do have right here, number 3, is one thing you want to check is, what kind of EMAs do you have? What indicators do you check before you enter your trade? Mm-hmm. Right? I don't use indicators. I just trade support and resistance. Mm-hmm. Got his little squeaky toy. So these are the things that you want to check, and the key to this is it's not going to be perfect right away once you start implementing this. It's going to take a long time for you to kind of go through this checklist and understand where price is going to go and what things are going to do, what things are going to happen. But the key is from going from like this taking you a couple minutes to like go through before entering a trade, to then maybe 1 minute, 30 minutes, and then 10 seconds where you're just like, okay, I know everything I got to check. I'm just going to do all this real quick, and then right into it. You become unconsciously competent where you know exactly what you need to do without even thinking about doing it. Just like I always use this analogy. Michael Jordan knows every single spot on the court that he's going to drain a shot. Mm-hmm. Steph Curry. There you go, Sharma. Yeah. Steph Curry knows every single spot on the court where he could just drain a 3 and turn around and not even look at it.
Yep.
Right? That's unconscious competence, where you don't even have to think about it. So that's where you want to get with your trading without getting overconfident.
This is the same exact stuff that I've sent out in my group too. We just broke it down into steps where it's like fundamentals, right? And what are the type of fundamentals coming out? When the whole Brexit thing was going down, for example, I had documents I was sending out, which it was like Brexit updates, right? So checking out those, and then checking out, well, are the fundamentals, is it a positive fundamental, negative fundamental, right? And how does it affect my pair that I'm trading? Moving on to the technical side, even journaling, checking your confidence, all that type of stuff. Like, we have an entire step-by-step. I'll try to pull it up here on the side, but it's pretty much the same thing that you have here, Stefanos.
Awesome.
And so pretty much what we're saying is create your own. right?
Yeah.
And think about, what does your checklist look like, and that's what you want to stick to, no matter what.
Wait, can we just go right back? I forgot to break down the bottom of that.
Yeah.
I think the most important part of this is the final questions over here, or the final question. This is the one thing you want to ask yourself every time before you enter trade. Is this thing an emotional decision or a logical, rational decision?
Mm-hmm.
Right? Am I just jumping into a trade because I just lost my previous one 2 minutes ago? Right? That's an emotional decision. You should probably stay out of that.
Yep.
Will you win that trade? Maybe. But most of the time, over the course of time, if you do a study, you're going to find that most of those trades are going to be losses.
Mm-hmm.
Right? So, eventually you'll get your skill back up where you know when to re-enter. Right? You'll get the confidence back where you know, like, when to actually jump right back into a trade because you know it's probably going to play out. But in the beginning, as a new trader, you're not at that point yet. You just got to understand, when people say, know your role,
Yep.
when you're on a sports team or whatever, you got to know where you're at in your trading career and that you're not ready for that. Maybe you will be down the road, but right now you're not.
I think what's the most important part here, personally looking at this, and what's going to help you determine, whether it's an emotional or logical decision, is this part here, 8 and 9. Right? So I think number 8 is what really answers that. Are you, following your overall trading plan? If you answer no to any of these questions, one or more, then probably it's not the setup that you should be trading. It's not the logical decision, right? Maybe you're getting FOMO or something. And especially if you're not able to answer number 9, then definitely don't be entering trades, right? You want to be able to understand before you get into a trade exactly how am I going to manage this, right? So, when Stefanos was breaking down his entry and he was going down to the 5-minute time frame and everything, he took the entry based off the 30-minute. That's where his stop loss was, right? But he was managing it when he dropped down to lower time frames, when he dropped down to the 5-minute, depending on what the market's doing over there. If you're not able to answer where you're going to exit, whether you have a profitable trade or a loss, or maybe price is just consolidating, it's not really moving much, maybe it's just 1 or 2 pips into profit, and that's all it's doing. Maybe it's just fluctuating in that range. Do you close out the trade, or are you going to hold that out until it moves in one direction or another? So being able to answer those questions is key before you get into any trade. It's as important as execution. I know a lot of people, they struggle with execution as well, but that's one thing that you want to be paying attention to.
And I know that looks like it takes forever to get through, and oh my God, I got so much I got to read, and I don't want to go through that. I just want to take the trade, right? I promise it gets quicker, right? All those things get implanted in your mind almost, where it's like, I know exactly what I'm doing. I always check all the time frames right before entering a trade, because you can be trading for 2 or 3 hours and forget what the 4-hour looks like now. So just do a quick overview. It takes 2 seconds, right? Understand where your stop loss is. What's my exit plan, right? What price are we at? Are we at a psychological price point right now? Are we at a major resistance? Are we at, all those different things you want to ask yourself.
If you think that was a lot to read, you're probably not going to like mine, which is 2 pages of this. Because I literally broke down my entire thought process of when I'm getting into a trade. That's exactly what I'm going through. So the document under fundamental breakdown, that's the Brexit document that I was talking about. Step 1 is fundamentals. That's always what I go to first. I want to know what's happening in the markets in the world before I even get onto the charts, technically, right? And then I break down all these questions, and then obviously, if it's a negative news, negative sentiment, I'm looking for sells. If it's a positive news, positive sentiment, then I'm probably going to be looking for buys on that currency, right? And then you go down to step 2, which is technical analysis. I broke it down even on time frames, entries, and all that type of stuff. This is how dumbed down you want to make it for yourself. So then it's more like a yes or no kind of a thing, right? And then the questions that you should be asking yourself for technical analysis, confidence level, journaling, things to keep in mind. So if you thought Stefanos, half a page was a lot to read, you're probably not going to like this. But that's pretty much how I dumb it down for myself. And this is the same checklist that I've, also given out to the group, and they make up their own.
The thing is, do you think Sharma has to read that every time she takes a trade?
No, because this is legit my entire thought process. It's in my head. That's why in every single breakdown, we go through fundamentals, we go through technical analysis, we answer all those questions, right? Even in the live sessions, we talk about your confidence level. That's where the whole psychology thing comes in. We tell you guys to journal as well. There's an entire video on how to journal if you don't know how to journal in our series of Secrets of Trading, right? There's a reason why we have all that stuff, because it's literally answering all these questions that you need.
100%.
Alright, so we're about to have, so we got a little bit of a bottom wick. Still not convinced on this trade to take this quick scalp, so I'm just letting, my previous one just run. Trail stop loss and all that stuff, that's all I did. I just managed the trade. But I want to see some sort of a deeper pullback, and we're about to get prelim GDP coming out in about 7 minutes.
Yep.
Any other questions or?
How's everyone's week going? You guys feeling good?
Yeah. I mean, besides everything that's going on, but,
Yeah. Given the
Capital letter.
circumstances.
Mm-hmm.
Yeah, it's terrible. If you guys really dumb down, it's the same thing with like understanding central banks and macroeconomics and how they really actually run the world. Central banks, it's a pretty like daunting, or I don't know the word for it, to be honest with you. It makes you feel uncomfortable if you really like look into it and all that stuff. It's an uncomfortable thing. It's the same exact thing with what's going on now. The stock market crashes, right? 2008 market crash. Think about The Big Short. They all knew what was happening. They all made a ton of money because they predicted what was going to happen. They told everyone else what was going to happen. But at the same time, people are killing themselves at that point, 2008, right? Losing everything, right? So it's a weird business that we're in, where we capitalize on any negative things going on around the world. Also good things, right? There's good things that happen that we capitalize on too, but we know what's happening around the world, and we take advantage of it.
Mm-hmm.
Now
And
you
that's
see that
financial markets.
What was that?
And I said that's financial markets.
Yeah, that's the game you signed up for.
Yep.
You gotta be able to live with it.
Every trade you take, do you look at the risk to reward before taking it? Absolutely.
Of course.
Absolutely.
And that's one of those things on both those checklists.
Yep.
One of those first things you're looking at is the stop loss. That's one thing I always got from Raquel. It's like, first, where's your stop loss going to be? It doesn't make sense. That could be like your first step if you want it to be.
Yep.
Then you look at the risk to reward. You look at, everything. Is this worth the range, right? Especially on like GJ or something. Like, you see a nice move, but it's only like a 10-pip range that you could be taking. Just stay out of it. It's not worth it.
And it's not just like these financial markets, right? Any investment that you try to get into, you always want to know how are you going to exit. Like when I did like those spreadsheets and all that type of stuff for like VCs, right? That's legit what the senior partners would first ask. Like, or even for like investment banks and stuff, like if we talked about any sort of investment, the very first questions that the senior partners had was, okay, so what's going to be our exit value? What's our return going to be like? What numbers are we going to be exiting at? And if you couldn't answer those questions, then obviously, that's not an investment that they're interested in. And if you ever said, if they used to ask us too, they're like, what's the worst case scenario? And if you ever said that probably break even, they just looked at you like, why are you even bringing this to me if there's going to be a break even trade?
Great point.
And that's because, we used to invest in companies that were very, 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 very young. So there's obviously a lot of risk associated with that too. So it's the same exact thing when you come onto the financial markets and you're looking at the charts here in Forex, especially. Where are you going to be exiting?
Sharma, you ever watch Ozark?
I haven't. I get told. No, I get told a lot to watch it. A lot of people
I think
like
it's right
it.
up your alley with the angel investing.
Yeah. I think I'll watch it.
It's my thing is, like, everyone tells me to watch it. I watched the first season and a half, and they lost me because I'm a big Breaking Bad guy.
Mhm.
and it seems too much like trying to be Breaking Bad.
Mhm.
Like they're like taking their playback, their playbook right out of
Mhm.
it. Um, it's funny. We're on Yellowstone now. We love it. Which one? On Andres? Is that how you say your name, Andres? Ozark. Okay. Yeah, Ozark is sick. I love Jason Bateman. I think he's a great actor. But again, I think it's dude. Justin, thank you for saying that. The spin-off to Yellowstone, I think, is better than Yellowstone. 1883 is amazing.
Stefanos, I have a quick question.
Sure.
On the 15 minute for
Yes.
gold, could you talk about the candle anatomy? I'm trying to understand what's going on with the candle that's about to
Sure.
close in about a minute and a half.
Yeah, let's
And
break the. I'm sorry. Keep going.
yeah, and the one that we had before, we had like a topic rejection. Now we're like filling up that wick.
Yeah, Sharma, can you just scale this a little bit
Yep.
and maybe zoom out just a tad?
Oh, zoom out.
Yeah, right there. Perfect. And then yeah, bring it to the middle of the screen. And then what we have was during London, we create this high, right? All the fear in the market, pumping right back up. Pre-New York, we make all these retracements right back down into this area like we just broke down, right in here, grab liquidity, and then you get this strong bullish 15-minute candle close. The next candle closed bearish, right? But it closed like above this area. And if you go to the 5-minute, you'll see what area we're rejecting over here. There you go. It's basically, let me get rid of all this. I hate when it's like a mess like that. We ended up holding support right over here still, right? So looking at the 15-minute now,
Yep.
if you could. Awesome. These candles, awesome. This candle right here and this candle right here, do those look strong to you?
Not really.
And a lot of times this wick over here ends up getting filled, which basically kind of did over here. But now we need a 30-minute bottom wick to form and then price to continue right back up to retest the highs up here. But we're holding support here. That's why I didn't get too spooked. I closed a little bit because it's in my rules that I'm going to close a little bit when the 15-minute closes in my opposite direction. I didn't close 50. I closed just a little piece, right? Just to, preserve some of my capital. And then you get the 15-minute, this is the 15-minute, right? Yeah. 15-minute bullish candle close right over here. So we're still holding support here. So this is your new support. Stop loss is right here. You could typically move your stop loss up here, which is what I did, right? Anticipating price to continue right back up with this 830 volume. Wait, what? We just had data come out. What was it? Anybody know? Was it a dud?
7% hit the
7%.
forecast.
What was that? Oh, there you go.
Yeah.
Yeah, so, I don't think that's going to, again, just like last week, right? We had a bunch of stats coming out, didn't affect the market that much. What affected the market was tensions in Eastern Europe. So now we have the same exact thing. GDP, prelim GDP, unemployment, all that stuff, it's not really going to move the market as much as what's going on right now.
Because that's what the forecast was.
Exactly. And what we're doing is we're still holding support here. We got a strong bullish candle, another strong bullish 15-minute candle. There's no reason for us to sell, definitely, right? And in fact, there's no reason to sell until you get back down to 1900. I don't think. I know there's times where you can get those short-lived sells back down to a certain area to then bring the price right back up, right? But at the same time, when you have fundamentals like what's going on right now, it's best to just wait for the support to form because you'll end up getting rejected and you'll get kicked right out of gold. So just wait for the support to form and take price right back up.
Mm-hmm.
Did that make sense though? Just how these candles were very weak?
Yeah, but you not taking out the trade until like 1900, that's for if you already took the trade from the bottom, right? That if you rode this entire journey up.
Yeah.
And this scalp that we're trying to do up to the highs that it just formed, uh, that still has the stop loss of the 5-minute supports that we're forming right now, right?
Well, it has the stop loss of the 30 minute, but the exit plan of the 5 minute. So like the exit plan, as far as like my plan, and it's also again that's why you look at whole numbers here. 1960. If we break below 1960, maybe we could continue right back down and get a better price point, like Sharma was just saying. So right now, as you can see, we're kind of ranging around here, right? We created this high, and what I'm capitalizing on, or trying to capitalize on, is the fact that we created a high. All those tensions happened overnight. We see videos, we see what's going on in Ukraine right now. New York is starting to come in, stock market's starting to open, right? Now this is where you capitalize on the buys to continue right back up, unless this is all already priced in.
You also have to note that higher time frames, like hourly and 4 hour, they're insanely bullish still. So this is kind of that liquidity grab, hourly candle right here. So I do expect the following candles to continue bullish, but again, this could be just the limitation of it. So if you're grabbing that scalp, then obviously don't put your stop loss all the way down to 1900. You're probably going to have like 0.1 to risk to reward.
Was that what he was asking?
He was trying to see so for the 1900, your trade needs to be somewhere down here, right? Versus the scalp that you just took. So if you just took a scalp, then your stop loss is going to be somewhere down here. And then if you took a trade somewhere in this little range, then your trade or your stop loss could be in 1900.
100%, yeah.
Yep.
So that's why I'm still not convinced in this for like a swing trade or something like that. I'm not convinced for this trade, but this is a scalp for sure.
Yeah, 100%. I'm just trying to see how we can manage this. We're just ranging here on the 5 minute. And this tells me it's not following my plan of what I said, where like 8 o'clock comes around, 8:30 comes around, and we get that spike up. Right now, we're kind of just ranging. This is where I'm starting to get a little uncertain about the trade. So when you get a little uncomfortable, you can take little pieces off. Mm-hmm. Again, your main concern is preserving capital. We got to see. If we break, how about this? If we break 1962 right here, and we end up closing below there, or closing below like this level right here, then I'll take 50 off. But right now, we're still holding support here, printing higher lows, possibly print right here, and continue up.
That's exactly how I am looking at this trade. As long as it's maintaining its structure on the 5 minute, I'm sticking to it.
Oh, so you're into?
Yeah,
awesome.
Yeah, I'm into.
Awesome. Anybody else?
Hello, in it as well.
Cool. What's up, Kev? How you doing, buddy?
I'm good. How are you, man?
Doing amazing.
Awesome.
So that's what I wanted to see on the 15. Is this simply a retracement here of this bearish move and then a continued push down, or are we actually going to hold on to this and then continue pushing?
Mm-hmm. Yeah, but like my plan for this, if you go up to the 30 minute, or the 1 hour, like this was based on the 30 minute and the 1 hour. So like my thought process was, if you could go to the 1 hour, I'm sorry.
Yeah.
See, now we're passing the low of the previous 30 minute. I just took a piece off. When you have a rejection of this with such bullish momentum, my thought process was take it, wait for that bottom wick to form, pass the high of this candle right here, and then this thing should take off. That was my plan. If we now pass the high of that candle and now we're flipping bearish, now I don't like it. Right? So now, again, preserve your capital. Don't be afraid to take a small loss. Mm-hmm. It's a lot bigger than a big loss. But this is where like the intuition starts to come in with your pairs, right? Understanding the way it moves and understanding your rules and stuff like that. It could very well continue right back up, but again, you're taking a piece off and you're living to see another day, because tomorrow or next week you're going to have this setup and price is just going to take off. But guess what? You're going to end up at break even because you ended up holding on to this one.
Yep.
You get what I'm saying?
And also,
like
you
hoping
want to
and
take
praying.
into account the timing too, right? This 4 hour candle's about to close here in just like 20 minutes, which we're clearly rejecting this area, right?
Yeah.
So then you want to keep like a little bit of room for the following 4 hour candle to make a bottom wick if it's going to continue bullish. But again, we just did tap into some key areas. So this scalp could still be valid, right? You could still look for a continued push up. But again, for that to happen, you need to see some of these highs being broken. So if you're still in the trade, start managing it exactly how Stefanos is doing it right now. Take off some pieces and stuff. And that's how you should be. Like, he already predetermined it before getting into the trade, right? A lot of people that do it after getting into the trade. And that's where you kind of mess up, because now you also have emotions stepping in where it's like, well, we're breaking the lows, we're, kind of consolidating, where's price headed, this and that. And then you kind of get clouded.
You start perspiring, you start biting your nails, just,
Yeah.
the emotions start running in. You don't want to be in that point. When you get to that point, that's where you cut off a piece.
Yeah.
Right? And then you live to see another day, you learn from it. If price ends up going in your direction, you study it, you backtest it. And then, over time, you're going to be like, okay, I could have held on to that a little bit longer. I could have waited for that.
Mm-hmm.
So again, like this could all be kind of priced in right now of what's going on. Yeah, a little side note, what we're talking about in the chat, this dude, Taylor Sheridan, the amount of projects he's coming out is like I respect hard workers. I know Sharma does. I know all you guys do. You guys all think the way we do as well. This guy, the amount of projects that are coming out, I feel like it's impossible. I don't know how he's working on it all. He's got like one of the final seasons of Yellowstone coming out. He's working on 1883, new series about Prohibition, 1923, I think it is, or 1932.
Yeah.
Right? You got this new show with Stallone coming out. I think he's doing Mayor of Kingstown with Jeremy Renner.
Yep.
Like it's almost impossible the amount of projects he's working on. I respect the shit out of it.
Yep.
It's cool. For the two shows that he's doing, Yellowstone and 1883, he puts these actors, like, notice how the actors are so natural at riding on horses? He puts them through like a 6-month boot camp. It's like a cowboy camp, where he takes them out there and like teaches them how to ride, teaches them how to do all that stuff. I would love to do something like that.
Yeah. Another cool thing about it is everything is like accurate to the time. Like the type of horses they're riding, the type of cattle they're herding. Those are the exact type of cattle that they had back then.
That's awesome.
Their clothing, everything is like all historically accurate. It's pretty cool.
Yeah, I think I love seeing the little surprise actors in 1883. I was really taken aback by that.
Tom Hanks.
Yeah. You're messing it up for everyone.
Quick cameo.
It's cool though. His wife too. Yeah, him and what's it called? I got nice Arsh. If you felt uncomfortable with this, I believe you probably had the same plan as I did. As far as like it should have taken off after passing the high that rejection 1 hour wick, right? If you had that same plan and you're starting to feel uncomfortable with it, take a piece off or get out, right? It's
Yeah,
a
that's
good
what
indicator.
I feel like. The level around 1966, 800, 900, those we're unable to pass that right now on the 5 minute, and we kind of broke the low on one of the 5 minute candles.
This is where those lower time frames come in handy. You're able to see this range here. You're able to see these rejections here. And don't get so like afraid of trading on these lower time frames. I'm not saying take an entry on these lower time frames. Our entry you saw was based on the 30-minute and the 1 hour. But on gold, you can start seeing these rejections here, right? This is a good indicator, especially like us holding. We get this bearish close right here based on this previous support over here. So first, we just rejected this area. But I'm not going to get out with that because we could be coming into this area to retest it, right? Or coming down into this area to retest it and again print a higher low, right? So our trade is still valid. We get a weak bearish candle, another bullish candle over here. We could very well be continuing up. But guess what? We get another bearish candle rejecting this area over here. So that's an indicator for you to be like, okay, we're starting to reject this area. It's not playing out the way we thought it would. Right? We didn't get terrible data coming out of the US either, which would push us up. So it's, all these indicators is all the intuition that you're going to be gaining over the course of time after journaling, over back testing. That's where the confidence comes from. Most people don't want to do it.
Yep.
So yeah, I still have a small runner going from, what are we at? I think I took this 1914, 11
Your initial entry?
was the initial entry. So I'm still in that one.
Good stuff.
What was that?
I said good stuff.
Appreciate it. We can actually break that down if you guys want. So you guys like learn how to do it.
Yeah, we could do.
Learn how to take that in the future.
Yeah, we could do both of ours.
Yeah, you too.
Yeah. Which time frame did you take the entry on?
What was that?
Which time frame did you take the entry on?
Either 30-minute or the 1 hour. I gotta. If we go back down, I'll show you.
All right. I'm gonna go ahead and remove this real quick. All right. So you said. All right. What was your entry price?
It was. I'm gonna go down to it. I believe it's 19, 14, 11, or 15, whatever. It's all the same shit.
What about the stop loss?
The stop loss was 1910. The original stop loss was around 1909.32, right below that support.
All right.
So what we did was, we started clearing this area right here. When we started breaking above this level, right here, you get the close above, you get the close above here, you get the rejection candle right there, and then you get the bottom wick formed and a pass of that candle right there, anticipating, knowing exactly what's going on fundamentally, having the full confidence for price to just push up from here, right? After clearing this whole area right here. Once we cleared this area, and Sharma talks about this all the time, especially on their backtesting sessions, live sessions, where you clear the area, you retest it, and then you just let this thing ride.
Yep.
Right? So, I was just going to say something, I forgot what it was. It'll come to me, but I hope that makes sense.
Mine was actually in that consolidation area, and then I took some partials as we got those retest, and then before heading to bed, I just let everything else run. So mine was, mine was 1899.23. I caught the same move that I caught when the actual news came out. Nice. About Putin asking for permission. It was the same exact entry, and then when price came back, started consolidating and stuff, and then we were heading into this news of the actual invasion. That's where I took this entry. And then the stop loss here was 18. Let me find my history real quick.
And like Arsh, if you, let's say you risked maybe like 2% on that, you probably only lost like 0.5. That's where you start turning the corner. When you're cutting your losses down a lot shorter, your wins get a lot bigger. Naturally.
Yep.
Good shit, Sharma.
Yes, this entry was taken off the 15 here. So if I'm gonna break that down, the very first thing that I had marked off here was narrowing in all of this. So that's the support area right here. That's why I kept my stop loss right here. That if price is going to break below this, then clearly we're going to continue down. And then we've seen price come all the way down here. So I didn't want to be part of all of this down here. So I kept it right there. And then when price created this support, and then continued pushing up. So I'll create a horizontal ray here, and then let's hop up to the hourly real quick. So this is that volume candle that I'm usually looking for, right? Where you have that bottom wick liquidity grab, and after that you have following bullish candles. So here what I was looking for is, this is a weak doji close right here on the hourly. So I was waiting for price to kind of clear that high. Didn't really get that with much volume. The following candle shot up, and so that's where I dropped down to the 30-minute. You got that little pullback, and then that close right above here, got that bottom wick and push up. So that was further confirmation, and the entry was here on the 15 as price was pushing up. So took that entry there, and then there should be no reason for price to pull back into these areas now that we have cleared out of it, given the break and retest that we just saw on the 30-minute time frame, and then the hourly and all of that as well. And then price kind of started to consolidate. So this is where I took some partials, and then this is where I had to kind of make the decision of, well, am I gonna ride that out? It was only a 10 pip stop loss on gold, so I was like, okay, well, whatever, because we've already taken partials at like 49 pips, almost 50 pips, right? So at that level, and then after that, price kind of just ran itself, and then I continued taking partials, and then my last partial was taken at 1957.34, which was I think early London session, so 1957.34. Yeah, so around this area here. So this was London session, and then pretty much done, and then we woke up for New York.
So one of my weaknesses is holding trades over a long period of time, right? And like, I'm naturally a conservative person, so I like to secure, and or if I start to get a little uncomfortable with some of these runners, besides this one, I'll be cutting it off and all that stuff. So the interesting thing is, I was just looking back in my history. So yesterday we took price from 1901, and I closed the full thing. Well, I didn't close it. My TP was actually hit at 1913. So if we could zoom out real quick.
Yeah.
I mean, obviously wish I held on to it, but it was this setup right over here.
This one?
I'll do the arrow right here. As we held this support over here, I knew that we were bouncing off this level right here, hard demand zone. We clear some of this area over here, create this high, come down and retest over here.
Yep.
And we take this thing right back up. TP was hit right over here. Right? But this is actually where I ended up getting into that scalp. It was going to be a scalp. I secured a lot of it around 1930. Right? I was on the phone with Noah, kid in our group. Closed most of it at 1930. Stop loss at break even, and let the rest run. Woke up this morning, secured another percentage right up here, and now it's still running. So I'm expecting some kind of a pullback into 1930, 1935 over here to possibly continue back up, but we'll see. But I'm break even, so I'm just going to let this thing run.
That's the best feeling. You let the trade run in the background.
Yeah, no, that's where you take emotions out of it. Is where you just close your MetaTrader and say goodbye.
Yep.
So it was a good call by you with this rejection up here.
It was very, very tight. So that was also kind of what or you're talking about up top here, yeah.
That's why I was saying, like, I wanted to just squeeze it, and before even taking the trade, I announced, like, I'm going to be closing most of my trade once we retest that, because we could very well double tap this area and then continue down. I thought we would at least get that with New York volume, but I guess not.
Yeah, so what I want to see, if you're going to be looking for like any sort of sell or anything like that, like for continued sell, I want to see this area right here being broken. And then this is the next area of target. So I think those are continued sells, and that's what's going to give us those good retracements that we need in order to continue pushing up. Maybe some liquidity grab from like this zone, or even a little bit lower, come back and test into this 1933 areas, and then continue to push up.
Did we get anything on GJ?
Let's see.
I think it stayed in that area. Yeah, it's kind of ranging over there.
Yep.
It's exactly what we said.
So there's not much else coming out. here. Let's see if there's any updates. There's a live coverage of Russia-Ukraine invasion, if you guys are interested in that. Let's see.
It's crazy because like we're really not used to all this going on. We're so used to the turmoil in the Middle East, and that's what we've been used to the last 20 some years.
Yep.
Now it's like we got the biggest nation in the world right now invading a country like Ukraine, which borders Europe.
Yeah. And so
Ukraine
that's
is
why you're with geopolitical tensions and stuff going on like that. Obviously, right now the markets, there's a lot more fear compared to at least like what I've seen in my back testing sessions, and then obviously, we were trading through whatever happened last year as well with like Palestine and everything. So obviously the markets there's a lot more fear going on right now, given it's Russia, Ukraine, the entire world is kind of part of it in one way or another, sanctions and whatnot, versus last year. It was pretty similar to it, but it wasn't that like huge of a scale as Russia, Ukraine is right now. We're still getting news about it. We're still seeing the markets kind of pricing that type of stuff in. But now there's a lot more fear because like it's Russia, nuclear power, all this.
I often put myself back in time as far as like how I would have, pictured trading, let's say during World War II, right? And like how that slowly started to escalate when it comes to like Europe and Germany starting to move into all these different countries. This is kind of what's going on, not to this extent, because Stalin was doing the same exact thing, right? He was moving west, and he was, they had Ukraine, that was part of the Soviet Union, but again, these countries, Poland is just next to Germany, right? Germany's right here. Ukraine and Bolivia and Romania, all these Eastern European countries are the only thing that border Europe and Russia, the biggest nation in the world, which is pretty much communist. So, actually, I don't know what they're just run by a dictator. What kind of republic would you say Russia is now? Because they're obviously not the Soviet Union anymore, but at the same time, they're kind of run like a communist nation.
They are.
What?
They are. They're very similar to what China is. China isn't completely communist.
They're a capitalist communist.
Yeah.
They understand, capitalists make money and you need money to serve like a socialist nation.
Yeah.
They
do what they want type of republic. There you go. That's pretty much what China is as well, right?
I do what they want. Yeah. It's whatever Putin says republic.
And so, I mean, obviously, they're capitalists as well. They're, making money and all that type of stuff. There's part of it which is, like a communist. There's part of it, I don't think any part of it would be like democratic, but it's more of like, I'm gonna let the market kind of do its thing. There's not too much intervention in that sense. But when it comes down to politics, when it comes down to the government and those type of things, like definitely communist.
I'd say the only true communist country right now is probably North Korea. And you guys
in every sense.
Yeah, in every sense, that's communism. That's what the Soviet Union was. That's what Vietnam was back in the early 60s, late 50s. Actually, mid to late 50s is when Vietnam really started turning around, and we had a lot of conflict with that. And you could say what you want about the Vietnam War and us being over there, but that North Vietnam was definitely a communist nation. North Korea, Soviet Union, which had all of Eastern Europe. I'm trying to think of, obviously you had Germany, which was fascist. You had Italy, which was fascist.
We love history.
I'm trying to think about it. Am I missing? Oh, Cuba. We have Cuba, and I mean, Canada's going that way right now.
History repeats itself in real life and on the charts.
Exactly. But yeah, it's interesting to go back and think about what, how trading would have been at that point.
Yeah. I mean, as sad as it is, you still capitalize off of these things. That's what sets us apart from all other occupations that are out there.
Would you call that a conflict of interest? Or is that like I don't know if that's the term you would use, right?
For what?
Just like the fact that like we capitalize on anything bad going on.
Anything good
I
and
don't
bad, like you said earlier. Right?
exactly, but I don't know if I would call that a conflict of interest. I
It's
would
not a.
call
I don't think it's a conflict of interest.
exactly. I don't. It's
That's
something
what
else.
trading is. I'm looking at the
Yeah,
markets. I'm
it's
not
trading.
capitalizing off of, there's X, Y, and Z people invading or X amount of people dying, whatever. I'm looking
Yeah,
at what the markets are doing. I'm looking at the
yeah,
currencies. I'm looking at the commodities.
yeah.
Obviously, the fundamentals are playing into it.
Wait, if we can take a look at the Dow too,
Yeah.
that's one thing you guys want to take a look at right now.
US 30?
Sure. So we are officially in corrective state.
There
We're
you go.
below. I said, I think we were talking about it on a breakdown. Like if we broke 34,000, like we're obviously closing below
Mm-hmm.
previous support over here with this candle right here. But now that we broke 33,000, now we're in corrective state. So now this is happening right now, and we didn't even increase rates yet.
What I'm
But
waiting
this,
to see is, are we going to end up seeing, which we definitely are, the Fed stepping in again and then pumping the markets. And I'm expecting, or I want to see if it's going to happen around this 3,000 area right here.
yeah, I was gonna say like
Or
this is
30,000, sorry.
these were the previous highs that we reached before COVID.
Yep.
This was COVID right here, which brought us down to 18,000. I remember being on a flight going to Florida. We had this trip planned to Emery Island in Florida, and we went March 13th of 2020.
Mm-hmm.
And we drove to the airport, parked our car at the airport, and I'm getting on the plane, and I'm just watching the market just tank.
Mm-hmm.
And this was when I got out of the market because I don't know if you guys remember, in January, late January of 2020, you guys saw in China, or I saw at least, on the news, they would show people just like dropping in the street. And then a van would come with guys in hazmat suits and pick them up, put them in the van, and take them away. Does anyone remember this?
I don't remember that, but
You remember that?
that's
I was talking to
wild.
somebody last night about this, one of my clients driving, and he remembers seeing that too.
Mm-hmm.
And I just remember at that point just being like, damn, like hope that doesn't come here. Yeah, Justin remembers that. So I was like, yeah, I hope that doesn't come here. But when a sure sign, so you guys know, a sure sign when the market's gonna crash. Obviously, the elites know exactly what's probably going to happen. They have the insider knowledge. You're going to start seeing a lot of CEOs stepping down from companies. And the one thing that really stuck out to me was Bob Iger from Disney stepping down. He stepped down before everyone else. Then you saw H&M. You saw Coca-Cola. You saw all these companies just dropping all these CEOs. And that's when I was like, you know what? This is getting a little weird. I'm going to get out. So I got out of the market at that point before this crash. And obviously I wasn't part of this, unfortunately, but it's all good. But that's the time I really started getting into trading and paying attention to Forex and fundamentals and all that stuff. I really just basically went to the wayside with the stock market and started going like 100% in with Forex, right? Just because it interests me more. Plus more liquidity, all that stuff. But
And when you say insider information, pretty much what you're talking about is obviously, no one's sitting there telling them like, hey, we're going to do a massive sell-off on the stock market. It's more of their companies, right? And their industries, and they're able to tell from that perspective. So for example, if I'm in, let's say, right now what's hot is EV, right? And like stock markets and stuff like that. That's what a lot of people are looking more into. Solar, EVs, those kind of things, besides obviously like the big companies that have been around for decades already. And so within that, you start to see, well, there's clearly growth happening, but also you're starting to see that there's some sort of, I guess you could say, consolidation within that industry, right? There's some like part of it where no matter what you're doing, you can't really grow because there are obviously obstacles in that industry and whatnot. And so when you're sitting at, well, new companies coming out and new IPOs and all that type of stuff happening, and you're sitting at highs like this, you know where your company is valued at, but the market's not willing to give you that valuation, right? And that's what happens with a lot of these companies. So right now, what you want to be getting into, you can make money even in this massive push down that's happening. And the way that you do that is you don't invest in those individual stocks, unless you're investing in stocks that pretty much hedge this entire sell-off, which are those commodity stocks and all that type of value stocks and all that type of stuff. The only way that you get into those growth stocks is when that move has already happened for you or has started for you, right? That's this entire massive push up. But you park your money. We're not giving financial advice or anything like that, but I'm just saying, you park your money into those.
Going in depth now.
What was that?
I was saying you're going in depth. I like it.
Yeah, and so the way that you park the ones that you park your money in is ETFs, those index funds, those kind of things, right? Which is industry average. You're not going to drop below the industry average. That's what you do on individual stocks. If you want to get into those individual stocks, right now is obviously not the time. You're gonna end up buying a dip that keeps dipping, right?
You need to have working capital if you're gonna be doing that.
Yeah, so you let the move happen for you, start for you, and then you get into those massive impulsive moves and those kind of things.
Mm-hmm. So yeah, what I was saying too is I think we're gonna come back to the previous highs over here. And everyone's going to be panicking from all this, right? Price is going to consolidate around this area. We're going to start breaking above this area over here. The Fed's going to be, stepping in, stuff like that, and then we could possibly continue right back up. Stock market, guys, currencies, as you know, 70% of the time with currencies, we're consolidating.
Yep.
Right? 30% we're just trending, right? It's only 30% is trending. With the stock market, it's almost like the opposite. Most of the time, we're trending, right? That's why they're such different. It's not like you're going to invest into the Japanese or Great Britain pound, Japanese yen. You're not going to invest into that over years and time, unless it's like we had the crash with 2008, or not 2008, but with COVID, right? You buy in at 120 where we ended up, 128, I believe we ended up retesting, and then continue right back down.
Mm-hmm.
Or continue right back up. We've been in that recovery. Remember, retesting 156. We break it down like every single day.
Give me 1 second here.
What's going on with Jais?
I have no idea. She just keeps muting and muting and muting. It's the same exact technical analysis that you would do for, currencies, commodities, or anything like that. It's all retracements, so there's no need to fear. Like, the stock market's been here for decades, it's not going anywhere. You've had a nice impulsive move. You are going to see market hitting resistance levels clearly. It has to correct, and then it's going to continue back up. Now the point is, well, are you going to be part of that impulsive move when it happens? If you were kicking yourself last time, then you think about, how do I get in this time?
I believe that Alan, for a specific grouping, Treasury will, once it is also engaged to this.
What is going on?
Yesterday they came back saying that since we are running the Australia NTM, but Australia NTM...
Maybe boot it real quick?
I did a couple of times.
Damn. No, I said booter real quick.
Oh, booter.
Oh, man. Bye, Jais. I was going to say something. Thanks, Jais. Oh, that's right. Back to what we were saying with, we capitalize on bad things happening. What do you think every 1%er does? Right? This is where people like, big CEOs, anybody with big working capital, knowing what they're doing, when you see the stock market tanking like that, that's where they get in and buy.
Yep.
right? That's where you capitalize. So you guys got to make, keep that in mind. Don't be panicking like the majority of the public. I think I put out my story yesterday. Like, I was asking if people backtest before their sessions, right? Or run a simulation session before their sessions. And most people said no.
Yeah.
Yeah, most people said no. And that made me feel good because I do that.
Mhm.
I warm my eyes up. Like, I'm not going to go to the gym and just start benching 300 pounds. I'm going to go to the gym and start with a plate. And I'm going to start with, plate 25, 2 plates, 225, and start working my way up to 300. So it's the same thing with trading. Why wouldn't you, you're actually cracking me out. With what, Jeff? But, like, why would you, you just woke up, especially if you're waking up for pre-New York, you live on the East Coast, especially like Sharma, you're waking up at 3:30 a.m.
Yep.
Like, you want to train your eyes and get used to it. So when I saw that, and most people aren't doing that, and they're like, no, it confuses me or whatever. All fairness, like if that's what it does for you, that's what it does. But for me, it just warms me up. It gets me going. Same thing with, like, one thing that you guys can put into your daily routine is looking through like 5 previous trades. Or what I do is on Trello, I have a column. You know how like you have like a column, like for me, I have 1 week here. The next week I have the next column here, and I have a bunch of cards in here for my trades.
Mhm.
One of these columns here is my setups, right? So if you guys want to create cards with breakout strategy, break and retest strategy, with examples in the images in there, that's going to help you guys a lot. And just run through that. You're going to have 10, 15, 20 different examples of each setup. Do you think that's going to help you when you're in the market, in the live market, getting your eyes trained and understanding what's going on? You can either do that or you can backtest. I was like, well, that's why most people, yeah. And I mean, it's so predictable.
All of it is very, very predictable. What people tend to do. The thing is that I do believe people are getting a lot smarter about, investments and that type of stuff, in the sense that they're taking the initiative to learn. Like,
you guys are.
When I was obviously, like, growing up when I was very, very young, people didn't do that, right? Especially, like, we talk about all the time, like, immigrant parents, they don't do that, right? They think it's the most riskiest thing that you could ever do. That's not really how you make money and all that type of stuff. But people are taking the time to learn now, right? But consumer behavior doesn't change. People still behave the same exact way that they used to behave, 10 years ago, 20 years ago, 30 years ago, especially consumers. Like, if you're trying to buy something, your habits, a lot of people's habits don't change. An average consumer is someone you give a paycheck to, and the first thing that they want to do is, well, what can I spend it on? I got some money, let's go out, let's go eat, right? Or let's go out and, buy something like a new car or whatever it is, a new branded whatever that they can't even afford, all that type of stuff. They don't think of, well, I just got this paycheck, how do I make this money grow? And then how do I use that money from that other income or that other source of income, and then use that to fund my lifestyle? That's what a lot of people don't think. And that's how you kind of stay in that rat race that, a lot of people talk about. So I'm not going to go into what, the elite do and this and that and what you should do as well, because that's something that you should be studying up on and kind of understanding what are other people doing. Why is there only such a small percentage of people being successful in these markets or being successful in business? And how do I mimic that? How do I become successful like that small group of people? How do I get into that little pool of people? Right? And that's what Stefanos and I try to help you guys with, because it's not like we just woke up one day and we're like, shit, let's do this on YouTube. This is stuff that we have experienced. This is stuff that we have gone through, right? And obviously we want to share that knowledge with you guys. But again, those are things that you're going to have to learn through experience. And you have to take the hard way, right? There is no easy way.
Yeah, Arsh, what I'm saying in the chat is, like, your parents want what's best for you, right? And they don't necessarily know what's best for you. So they go by their previous experiences. Like, for instance, my dad. My dad is a typical Greek immigrant who is very much about education, which is what he was taught, right?
Yep.
Education, go get a job, 401k, all that good stuff. And of course, there's many different American immigrants that come here as entrepreneurs too. That's just not the way I'm wired. And your dad just wants what's best for you, and that's what he thinks is best for you. Maybe he thinks trading is a scam or anything's a scam. Take that like a grain of salt and be like, okay, Dad, whatever, and go out and prove him wrong. Now that can't be your main why, but it's got to be one. It can be one of them, right? It can be, yeah, Rafa. It can be like a lot of people say, don't let haters drive you or anything like that. If it drives you, let it drive you naturally, right? Just don't let it be the main thing. That can't be your main why, like proving other people wrong, stuff like that. Just one day you're going to be able to show up at your dad's doorstep or whatever and give him an asset. You can gift him a rental property where he's going to be making cash flow on that every single month. You know, so that, you know, that's got to be one of your whys, right? Just proving him wrong.
And that's my story.
There you go.
Because I did the same exact, like my dad did the same exact thing. Or
Exactly.
like my family did, and that's why they didn't know for the longest time what I was doing until I made, you know, X amount of money, and I was like, yo, so, you know, by the way, I'm doing this thing while I'm in college. Because my dad's biggest thing was, you know, I'm sending you to college, you better, like, learn, right? I don't want you, like, he never told me, he was like, if you're gonna go to college, like, you need to work, or you need to do this. Like, he never told me any of that. He told me, go to college, get an education, get a good job, have a secure future, right? And so, obviously, this type of stuff is very out of the norm for them. Mm-hmm. And so, when I finally, you know, got something that I could come back and show my parents, that's when I was like, hey, Dad, like, this is what I'm doing. Here's what I've made. Here's what my investment was. And this is where my interest is. And he was supportive of it because I had proof to show him.
Yeah.
I walked him through everything, right? And for the longest time, now my mom starts to understand it, but for the longest time, she was like, are you sure what you're doing is legal? Right? She was, when I explained to her, like, what Forex is, she was like, I have no idea. So, like, the stock market, I was like, no, it's not the stock market. And I had to sit down and show her as well. So there's always going to be, like, you always need to show proof. So for me, proof was flipping, like I told you guys, started with 100, flipped that 100 to like 1,000 to 5,000. That was proof to me that, okay, this works. Now it was a matter of, again, preserving capital and then making that grow, right? Instead of being like, oh, I just flipped it to 1,000, I know what I'm doing, and then you go out and, you know, act like a fool or whatever. Don't do that. It's an entire learning process. And then when I flipped that 5 to, you know, much higher numbers and figures, then I went to my dad and I was like, Dad, here. And he was like, well, you're earning more than, you know, what other people are earning, like, even my age, doing the job that I'm doing. Yeah. That's when he was proud of it, and he was like, all right, like, if that's where your interest is, then continue doing it, and he was supportive of it. So,
damn right I'll keep doing it.
What was that?
It's like, damn right I'll keep doing it.
Yeah. And now the funniest thing is, like, it's a joke to me, but the funniest thing is, like, you know, a lot of my family, when they hear about it, now they come to me and they're like, yo, like, help me out. But the same exact thing is I don't give them this information. I don't just tell them, go buy this, go sell this. I teach it to them. And the reason why is be self-sufficient. Because if I'm not there to tell you, you know, get into this or get out of this, then how are you going to manage your trades? How are you going to make that money? Versus if you know exactly what you're looking for, then, you know, you could go out and you could trade whatever you want. Even if I'm on vacation, I'm not able to pick up your call or whatever, you know exactly what you're looking for.
100%. Yeah, it's funny. I mean, you guys are going to come across family, friends that, you know, in the beginning of your journeys, whether it's entrepreneurship, trading, whatever it is, they're going to be doubting you, right? And obviously those are the people you want to kind of separate yourself from a little bit. But at the same time, in all fairness to them, they just need to see it. They need to see proof because they don't believe it unless they see it. That's what, you know, it's the same thing with, like, I don't know, if you're trying to persuade somebody or influence somebody, if you can show them, they're going to believe 20% more. Like, there's a 20% higher chance that they're going to believe where you're, actually, no, there's an 80% chance. But the other thing is, like, if somebody else tells them, it doesn't matter, like, if you're trading, you have a friend that sees you trading, and then you have another friend that is doubting you. That other friend that tells that other friend that you're really doing it, you're really making money, that other person, the doubter, becomes 20% more likely to believe what you're saying. And that person could be a stranger. The person that's like telling them, yeah, he's actually really doing it, right? That person could be a complete stranger, and it won't even matter to your friend because your friend will be like, okay, wow, a total stranger saying that, or somebody is telling me that they're actually doing it. I believe them now. But again, in all fairness, they just need to see it, and once they do, then they'll believe it. But not that their opinion really matters, but that can be a driver for you. It's like, okay, people aren't going to believe what I'm doing until I actually do it.
Yep.
And not that that's the important thing. Is you need to prove it to yourself, right? So you just need to put the work in. Stop talking, right? Stop talking about what you're going to do or what you're doing now. Just do it.
Yep. 100%. That's also why I was kind of hesitant when I was telling you about the simulation session in the beginning to say it out loud like that. And I was like, well, it doesn't really even matter because we have the recording of the simulation session for that 900 pip trade. And you guys saw it. It wasn't that hard to get 100 pip. Once you practice that, it wasn't hard to get that 800 pip almost move here, either in the live markets. It's the setups over and over again. Exactly. But that's pretty much our TED Talk for the day.
Yeah, 100%. I think this is a great session. I think you guys hopefully got a lot out of this.
Yeah.
I always look forward to these. I look forward to it next week.
100%. So you guys know what you are looking for. Like we've pretty much told you guys exactly what to look for here and on GJ as well. As always, if you guys have any questions, just feel free to reach out to either of us. The fastest response is going to be on Instagram at SharmaFX. And then also you can reach out to Stefanos as well, same thing on Instagram or even on his YouTube. Are you still using TikTok?
Yeah, definitely.
Okay, so you can reach out to him on TikTok as well. But be very careful in the markets. Obviously, the most heavy fundamentals coming out is everything related to Ukraine and Russia and all the news related to that.
Pray for Ukraine.